At this digital consultancy in Kuala Lumpur, the weaker ringgit has taken its toll on operations.
Due to the nature of our business, actually dealing with all those platforms like Google and Facebook, where we are actually paying them in US dollar. So this sliding of the ringgit and also the economic situation doesn't help much. It could be actually affected us a good 15% and above, depends on which industry that we are helping in.
Inflation is also adding to cost pressures, peaking at 4.7% in August from just 2.3% at the start of 2022. Analysts agree that the government's nearly 80 billion ringgit subsidy program that caps prices on essential food items has helped shield consumers from the worst effects of inflation. But small and medium-sized business owners are still feeling the pinch.
If you look at manufacturing, if we need to import anything, it's going to be USD. Everything starts to be more and more expensive. A bowl of noodles will be last time 7 ringgit, now it's 7.50. Very soon it will be 8 ringgit and maybe even 10 ringgit very soon.
Adding to these challenges, a labour shortage made worse by COVID-19 that runs across sectors.
About 4 or 5 years back, I would put up an ad on Job Street or any of the job websites, and I would get 100 applicants. Today, I can get about 30 applicants.
During the pandemic, Malaysia implemented wage subsidy schemes, but these were only for Malaysians. The foreign workers were excluded. And of course, without wage subsidy, a lot of the foreign workers, companies couldn't support them, they had to go back home. Therefore, especially labour incentive sectors like micro SMEs in the food and beverage sector or even manufacturing are facing a very serious labour shortfall.
Business owners we spoke to say they're hoping for better access to financing, as well as help to deal with the talent shortfall when a new government is formed after November 19th.
The entire system needs a reset. The policy needs a reset. The mindset needs a reset so that the people, it's actually more people-friendly and business-friendly as well, and investor-friendly, I would say.
That's why analysts say the economy trumps all other concerns for voters. While the Malaysian economy is expected to benefit from the reopening of borders, the outlook for 2023 is uncertain. Growth is expected to ease to 4 to 5%, from 6.5 to 7% this year.
We are seeing signs of major Western economies, especially Europe, facing this situation already, given the surge in inflation caused by the fallout from Russia-Ukraine war. There's also uncertainty surrounding China's economic prospects. These major economies, US, Europe, China, are Malaysia's key export markets, accounting for around 1/3 of total exports. And at the same time, nearly 1/5 of Malaysia's GDP are exposed to the final demand from US, Europe, and China.
In the short term, analysts say that the government must focus on cost pressures and helping small businesses.
Address voters' concern on the cost of living issue, especially on necessities like food security, affordable housing. Second, improve the quality and delivery of essential public services, namely education, healthcare, and public transport. Fourth, continue and enhance policy support to the economically important SMEs to address the critical issues of human capital development, especially on talent and skilled workforce, to aid the recovery of the tourism ecosystem.
In the longer term, there are calls for the new government to focus on strengthening Malaysia's competitiveness and value proposition to foreign investors. Key to this is ensuring the young workforce is appropriately skilled.
35% of the youth are facing skills-based underemployment. So they are employed, not that they are unemployed, but they are employed in sectors that does not match the skills qualifications that they have. This is a timely opportunity for Malaysia to considering moving its economy towards greater productivity.
While the outlook for 2023 is cloudy, there are still pockets of opportunity for investors, based on measures unveiled in the recent budget.
the measures like income tax cuts for the middle income taxpayers and the continued cash handouts for lower income households will be positive for consumer staple stocks. The technology and renewable energy sectors, we think, will benefit from the supportive tax and investment incentives. And at the same time, the additional exemptions and incentives for accelerating electric vehicle adoptions and development of national charging infrastructure is favorable for automotive sectors.
Ultimately, stakeholders say it doesn't matter who comes to power in GE15, as long as they have a strong mandate to see through economic reform. That will be what's needed to boost investor confidence after the past 2 years of politicking.
Malaysia has been performing at about 5% GDP growth per year for the last about 10 years or even longer, but actually Malaysia's potential could be done much higher than 5%.
We need to have the kind of long-term narrative as far as where the economy is heading. I think that's lacking over the last few years. We have too much politicking, not so much policy making that create a bit of uncertainty, clouding the long-term outlook for the economy.